Hey, everybody, happy Sunday. For those football fans out there, I wish you all luck. See what happens. Today in the US is a thing called Super Bowl. A lot of people are very excited by that. A lot of people will eat a lot of bad food and drink a lot of beer. So have a good time. Be safe, everybody. But today, I want to just, first of all, so grateful to the community for putting all these great questions together. And please like and subscribe and get me out of this shadow ban. As I mentioned, something I shouldn't have that put me in the naughty box. So with that, let's jump in and cover definitely the most alpha on the web anytime, anywhere. And as I say, if you don't learn something new, you don't have to hit the like, but you will. You'll learn many things new every single video. So disclaimer, this is edutainment, and where to ask questions. You can see here, and a big thank you to the biggest and the best and the smartest financial community on earth. And thank you for all the brilliant questions and all the shares and hanging out with me every single day. So thank you to the folks on Patreon. They make this possible. Now let's go. First question is from G Banger. Is a death cross on the weekly more poignant than a golden cross on the daily? The MA 550 200. So this this drove me bonkers last week because everybody's saying, oh, golden cross and 50 doesn't matter. You got to look at the death cross. It's like, please, people. And I always say, time series is everything. And I'll probably repeat that a few times today. You can make any chart, sing any song you want if you play with the time. Okay, that is very, very important to know. Of course, let's just jump in and, again, don't believe the hype. So first of all, the definition of a death cross, which is the inverse, it's the same as a golden cross. And again, to repeat, time series matters. So let's just go in. Death cross is the most closely watched stock market moving average, or the 50 and the 200-day moving average, not the 50-week and the 200-week. And the death cross is supposed to reflect recent price weaknesses, and it refers to the drop of a short-term moving average, meaning the average of recent closing prices, etc., etc., etc. But basically, death cross is when the 50-day crosses through the 200-day, not the 50-week. So I decided to pull up a wide smattering of charts to dispel this crap for once and for all. And again, watch what you hear on FinTwit. There's a reason it's called FinTwit. So this is what caused all the calamity last week. This is the so-called 50-week, 200-week death cross for Bitcoin. The 50-week is the yellow cutting through the red, or it's green or whatever color it is. I'm not quite sure because my eyes don't work. But this is what freaked everybody out. It's like, oh my God, it's a death cross. We're all going to die. No, not at all. So let's look at some other examples. Let's look at Amazon. So Amazon had a death cross as well very recently. You can see here, again, the green cutting through the red, the 50-week cutting through the 200-week. Do you think this looks like Amazon's going to tank further? Many maybe TA specialists probably think, yeah, it's like S&P 500 will not get any returns for the next 10 years. S&P 500 go to 1,000 or 2,000, same thing with all these Bitcoin forecasts. But no, it's not. So that's Amazon. Let's look at another one. Let's look at, I was just pulling a smattering like oil and petro companies, retailers, tech companies like Amazon. But this is Walmart here. Now, this is a fascinating one because if you look at the death cross that happened way back in 2016, I think approximately, I can't see the numbers, it cut through actually late 2015. This was the signal that people should have freaked out. But the line of the intersection of the 50-week and the 200-week marks the bottom, the lowest price that Walmart ever traded at since 2011. And look what happened after it did this. It went on a rampage, up over 300%. So again, if anything, this tells you that the death cross on the 50-week, 200-week could actually be a very bullish sign. But let's go a little bit deeper. Let's look at Oxy, oil company, Occidental Petroleum, big Warren Buffett bag. And you can see here, death cross, and the stock shot up. Okay, but what also happened, we had another one, which was kind of a weird time because a lot of strange stuff happening in 2019 and 2000 with C19. And that's why I always say macro C19 drove the price, not TA. There was a death cross, but that's one where it did go down. Again, you see here, it's more likely this price will go up after a death cross on the 50 and 200 week moving average. Let's look at Microstrategy. Again, they just had one too. And we know this is a proxy. But again, even proxies can have it. And the price of Microstrategy is a function of Bitcoin. So with that, again, it is completely meaningless. And as I stress, don't believe the hype when you hear this stuff. Pull up your trading view, run some numbers, and decide for yourselves. Otherwise, you get scared out of the market. And it's funny because so many people that were hoping for that $10,000 Bitcoin were like, yes, yes, we got a death cross in the weekly. We're going to get it. Yay. Anyway, Bitcoin's above 22,000 right now as we speak. So next question, JGI. In your recent pair trading video, you commented you were more bullish on Tesla than Bitcoin. Care to elaborate and give reasons for the comment? Well, it's funny because these are my two biggest holdings, and after real estate, of course. And I'm always thinking, which one is going to run faster? And I run model after model after model to try estimate. Now, last year, I ran Tesla Bitcoin models, and under the bear case, Tesla was outperforming Bitcoin by 2030. I know people think it's crazy for that to happen, but that's it. So therefore, I look very carefully at when one is overbought or oversold, and look carefully at the pair and decide if I should swap between them. And it's all about short-term trading. It's not so much about long-term, because I don't know which one will win over the next 5, 8, 10 years. Maybe Tesla, maybe Bitcoin, but they'll both do very well. And that's why I'm heavily positioned in both. They're both safe, zero downside. But again, I always say Bitcoin could go to 0, 1% chance. Same thing probably with Tesla. But this is the chart, and this is what I was talking about. So we saw, it looks like, one thing went on a rampage, but no, they're both kind of flat, except Tesla took a huge hit in the market because of all the FUD being spread. Again, don't believe the hype. That should be the name of the video today, actually. But here we saw the amount of Tesla shares per Bitcoin. That's what this chart represents. And I always stress everybody, think about everything in pairs. For 32, 33 years, I've been thinking about everything in pairs. Even over 42, 43 years ago, I used to compare the different currencies to the Greek drachma, for example. But if you look at this chart, you can see it went up and to the right. And what's going on here? 173 Tesla shares per Bitcoin. That, for me, told me that Bitcoin was very expensive compared to Tesla. Therefore, I flipped some Bitcoin into Tesla, and then I did some more. And then within literally 25 days or something, we're down at 105 Tesla shares per Bitcoin. So to some people, that still might be confusing, because until you really wrap your heads around pairs, and that's why we stress them so much in this channel, because so much money can be made. I'm going to walk through the math of exactly why we do it. It doesn't mean that I think Bitcoin is bad or Tesla is bad. I think one is overbought or one is oversold. I look at the other, analyze the timing, and then swap. And the plan is to swap back as well whenever the timing is right. So let's explain why it makes sense. So here, remember, I'm still in the swap. These are just numbers. 16th of January 2023, Tesla price was $122. Bitcoin price was $21,308. And I was looking at the charts and said, there's no way, I believe, that Tesla will double in 2023 before Bitcoin doubles. I.e., Tesla will hit, 220, 240, way before Bitcoin hits 42, 44K. That was my thesis, and I published it very well, and shared all the trades in real time as well. So if you look at this, you get 174.655 shares for every Bitcoin. That's Tesla shares for every Bitcoin. And the start investment was $21,308. Then I flopped another Bitcoin in there as well, etc. So you get the idea. But then on the 9th of February, just 25 days later, Tesla price at $211. Bitcoin was at 21,797. So Bitcoin went up a little bit, $400, but Tesla nearly doubled. And that is the beauty of this. So when you if you were, hypothetically, if I were to swap back on the 9th of Feb after 25 days, I would have increased my Bitcoin holding from 1 Bitcoin to 1.69 Bitcoins, or a 73% gain in a short window of time, approximately, depending on exactly when you measure. So basically, you could go from having start investment $21,300 worth of Bitcoin to $36,852 worth of Bitcoin. And that is why we look at pairs, we look at swaps. This is always, always, always a pair trade to be had. And you just need the tools to be able to find the right ones. Next question, which was a hot issue all week for everybody out there. With the SEC aggressively attacking crypto staking, with more most likely to come, like Coinbase people believe is next, and the reputation of Gary Gensler being strongly anti-crypto, is it time to sell all crypto and move into Tesla while we wait for the regulation dust to settle? Aaron, so this is one I think about all the time. Right now, after Tesla nearly doing a double, 100% gain in a few weeks, that probably would not be a good strategy. But I want to stress this. First, as many people say, there's Bitcoin and then there's everything else. Okay, so don't conflate the two. They're very different. And Gary Gensler used to teach Bitcoin class at MIT. That's probably how he got close to Caroline Ellison's father, because he worked for him at MIT. You can see the patterns here. Very incestuous. Anywho, I'm not casting any aspersions, just sharing common information. But he seems to be a proponent of Bitcoin, not so much other things. And maybe under the Howey test, the move to proof of stake for Ethereum makes it a security. So next, this just came out today, actually. Gensler, SEC, and SPF timing is most suspicious from Bitcoin News magazine, and the letter is from Republicans. Asserts that the timing of the Sam Bankman-Fried's charges and arrest raised serious questions about the SEC process. We all know Gary Gensler had private meetings with SPF. What they discussed, I don't know. I know Brian from Coinbase can't get a meeting, but that's a separate issue. Also, we spoke about Chokepoint a couple of times already this week. There are apparently orchestrated plans to control crypto. The question is, control for who? Kill it, control it, put it in the hands of big traditional finance companies? I don't know. But Elizabeth Warren and the SEC were coordinating attacks on crypto. So no doubt about that. And that is also shocking. So the good news, and the reason I kind of have a little bit of hope, is because of this. This is two things. One is FOIA. I've been looking at and very grateful for a very long time. That's the Freedom of Information Act. It's a federal law in the United States that gives citizens the right to access federal government records. And all of this is uncovered because of FOIA. And then we have the Heritage Foundation. It's a conservative think tank in DC. I think they were founded in the 70s sometime. But it has now become a top engine. So I do believe going forward there are two classes of politicians. There's those that embrace innovation and those that pander to their donors and look to control the citizens. Well, it doesn't matter which party they're from. They both exist on both sides. So I'm not going to get involved in that at all. But I do believe the world is smart enough after the last 2 years to question everything. And through the freedom of information, etc., knowledge will come to the surface. And I believe the US will favor innovation because it favored innovation with the internet and telco, etc., all the way back. And it's been very beneficial. You can't kill innovation. It'll just move offshore. And I'm not leaving crypto because I believe it's asymmetric. I may trade between Tesla and Bitcoin or ETH and whatever else, swap stuff when I believe they're too hot or not. But I still believe in crypto. So that is just my 2 cents. And I hope it helps. Thank you for your question. Let's go. Next one is from Lumux. How much has your battery life degraded? And how long until it will need replacement? And what's the cost to replace it? I heard a new company in California refurbishes EV batteries. Is that an alternative to replacement? And if so, what is the cost to refurbish versus replace? Well, first of all, this is mind-blowing. When you look at, and I'm not going to do a deep dive because this could be its own video unto itself, but I will speak about my own personal circumstance, which is truth. And I measure everything. I measure every trip. I measure the amount of kilowatts I use. I measure the time it takes to charge. I measure the amount of electric usage across different temperatures. But this is a real life case. And I've had the Tesla X for over 4 years now. Okay, nearly 4.5 years. And this is a route I do very frequently, at least once or twice a month. I know it backwards. And FSD drives most of it and has been for a long time. So the route is 255 miles long. What's that? 400 kilometers, something like that. It includes a 5,000 feet climb, which is about 1,500 meters. And I never, ever let the car go below a 20% charge, because that is bad for the car, bad for the batteries. Also, zoom out for a second. It's also bad to use the supercharger too much. So I try and avoid that too. I like to charge it at home on a 30 watt, 30 amp, or whatever it's called, charger. Now, I started the trip back in January of 2023 with a 98% charge, because I don't go to 100% either, because I find it just makes the car too hot. And the car is just, when you start up at 100% charge, it just wants to take off. And I think that's just a bad sign. But the first time I ever did this 255 mile trip without stopping for a charge was in January 2023. And the temperatures were as low as 19 Fahrenheit, which is -8 Celsius. Okay, this car, over 4 years old, 40,000 miles. I do 10,000 miles a year, not a lot. And a lot of long haul driving. How is that possible? In 4 years, I've never, ever achieved this mileage range. And the answer is Tesla. They increase range by over-the-air updates. They improve the regenerative braking, the use of power, use of energy, the preconditioning for the batteries before you go into a charge, etc. It is incredible. Back to your question regarding how long the batteries last. They typically last up to 1 million miles. They are supposed to degenerate. Mine haven't. Don't know why. I blame over-the-air updates for, it's like getting into a new car every 2 weeks, and I feel like I'm selling Tesla right now. But it is just mind-blowing. This is the beater fleet. That's the X on the left. It's a big, heavy car. And of course, the Model Y on the right. Far more range, far more efficient, far lighter. So with that, it is just mind-blowing that after 4 years, my range has exceeded. My batteries have not degenerated at all. So thank you for the question, Lumux. Next question from I Want to Go. I hear you speak a lot about hedging, and I think I understand the concept, but could you explain it based on experience and apply it to a crypto example? Brilliant question. This could be another huge video unto itself, but I will go high level. And I think what happens within the Patreon community, I open the door to a topic and then expose more and more, and then subsequent questions come in, like pair trading. Now you guys are very sophisticated with ARB and pair trading. So let's talk about the 3 different categories of how I hedge. Okay, first one, hedging cryptocurrency. And I do a lot with equities as much as I can too, when I believe they are frothy. But hedging in cryptocurrency refers to a risk management strategy where the investor takes out a position in an asset to offset potential loss in value of another asset. And the idea behind this is to protect from volatility or a drop in price or whatever else. Now, with this, that is basically what it is. And again, I use TA to determine when things are overbought or oversold. Next, my methods. Method 1 is real simple. Say, for example, I hold a large position in Bitcoin and I'm worried about a potential drop in its value. I can buy a put on Bitcoin, normally at the money, or I can hedge by selling a call on Bitcoin just out of the money. That's kind of my preferred methods. But with crypto, it's so volatile and so unpredictable, you don't really know what's going to happen all the time. But this is a visual of exactly what that is using a future or call option. Imagine Bitcoin's at 10,000 for simplicity. If it's Tech 22 today, so just for simplicity, 10,000 here. And if I sell a call option on Bitcoin with a $10,000 strike, if the market increases the price of Bitcoin to 11,000, I technically would lose $1,000. But if I collect $1,000 for the call option that I sold, I'm at break even. And that's what I like to do. I like to sell time value after things are volatile. Now, if the market fell to 9,000, your profit would be 1,000. So this is kind of a simple way to think about it. If you guys want me to go deeper as to how to hedge using options for crypto, I can do that. It's really easy, but I do it mostly for equities. Next method, number 2. Again, if I hold a large position like Bitcoin and I'm worried about a drop in value, or Bitcoin staying flat, which I was worried about in January, I can swap into a co-integrated asset or an undervalued asset. And this is what I did with Tesla, the example we covered before. So I took a bunch of Bitcoin, flipped into Tesla, and ready to flip back. And that has been, again, a very, very clever thing to do. My regret is not doing it all. I could have nearly doubled my Bitcoin bag in a very short window of time. Kind of stunning. Method number 3. If I hold a large position in a particular cryptocurrency, like Bitcoin, I can take out a short position in another cryptocurrency that I believe will fall faster, i.e. a co-integrated crypto that is totally overbought, or something that has no fundamentals, or it's a ghost chain. And this is what I've done in the past too. So, like after the reg fear this week, we noticed, I think Ethereum fell by 10, 11%. Bitcoin only fell by 7%. So if you think Bitcoin could fall, another co-integrated asset will fall faster. You take the position on that one to protect yourself. And that way you get a little more amplification as well. But because the asset is more volatile, the options pricing can be a little more expensive too. That's why I sell them. So, little secret there. So next one from Jerry H in the UK. What are your thoughts on MicroStrategy stocks as an indirect way for exposure to crypto market when buying crypto is not an option for a pension fund? So glad you asked. I've spoken about this a number of times, but I will repeat it again, and why I believe MicroStrategy is better than an ETF. But there's a huge caveat as well. One is, I call this financial jujitsu. They use free cash flow to buy Bitcoin. They can issue stock to buy Bitcoin. They can issue convertible debt to buy Bitcoin. And they can borrow against their Bitcoin to buy Bitcoin. So these are things, like financial tools, kind of like the hedging stuff we spoke about, that an ETF cannot do. And that makes MicroStrategy like an ETF on steroids type of thing. Much bigger, stronger, faster, way more financial tools to be able to accumulate more. Now, per Michael Saylor, the way he positions it, he said if there was a spot ETF, he'd be paying 1 or 2% fees, and it wouldn't be leveraged. And with MicroStrategy, we have a software company that generates free cash flow. So we convert our cash flows into Bitcoin. And MicroStrategy is a de facto Bitcoin spot ETF that generates a 4 to 5% tax-deferred yield. Boom, boom, boom. Even more benefits. In fact, MicroStrategy and Saylor, they launched their own version of kind of a MicroStrategy Lightning, where they want to try and help, I think it's a marketing use case, CMOs reward customers directly without fees of marketing firms or advertising or anything else, but to be able to drop maybe some Satoshis into people's pockets using Lightning, or even dollars, at a very low friction way. So that's very interesting. If anybody wants to do a deep dive into that too, I think it's fascinating, but I know not everybody's interested in MicroStrategy, so we'll see. In addition, what you can do too is play the ARB Cloud. This is a tool we've built. Just to give you an example, if you can buy a Bitcoin proxy and sell it tax-free in your account, in your retirement account, this can be very powerful. And kind of like the swap trade we did with Bitcoin to Tesla, this is another one that you could have done late 2022 in November. In just 2 weeks, you could increase your Bitcoin bag by 25%. Now, I don't know in your retirement account do you have access to GBTC, because that could be your proxy for Bitcoin, and watch the pair between those two as they go forward, and then play the ARB, because sometimes MicroStrategy gets very oversold. It was very clear when it went above 300 last week, it was overbought. But sometimes it goes the other side. And if you look at MicroStrategy in after hours right now, you'll see a big pump. And maybe this is because of the news I just mentioned a slide ago. So, and remember always, and I always stress this, same thing, hasn't changed in 2 years. Manage your risk. Never, ever have more than 10% in proxies. Never have more than 10% or all your eggs in one basket, whether that be a wallet or staking or anything else. Okay? It takes a lifetime to accumulate capital and a second to lose it. So make sure you spread your risk carefully. Next question is from Aquamarine. You've mentioned that real estate prices typically bottom out about 6 months after a stock market bottom. Are real estate markets correlated with stock markets? And do real estate prices tend to recover once stock markets recover? Great question, a lot in there. And I've been looking at this for 30 years probably. So let's look at the Case-Shiller index. This is the US home price indices for, where are we? As of November? Because it's always a little bit backwards. We'll get the December version real soon. And it's a 3-month average of the September, October, and November closing prices. And remember, it's very, very lagged. This is one of the key things that I want to stress. So for example, September closing prices include some contracts signed in July, but there's significant lag to this data, maybe 1 month or more. But right now, the Case-Shiller is down for 5 months. Okay, next, let's look at more Case-Shiller, but a comparison to the NAR, that's the National Association of Realtors. They're beginning to align. And normally the NAR is far more precise and less laggy than the Case-Shiller because you hear directly from the horse's mouth of people selling properties on the street almost every day. And the year-over-year change in median house prices from the NAR at the end of the year change in the Case-Shiller index. And median prices are distorted by the mix and repeat sales indexes like Case-Shiller, but they're probably better for measuring prices. However, in general, the Case-Shiller index follows the median price, and they are converging right now, which typically for me means a bottom, which is a good sign. Again, let me know if you want to do another real estate recap, because a lot of this is kind of tricky, and whatever happens in the US tends to happen in other markets around the world. Germany could bottom next, Australia, etc. So let's look at this other one. This is another graph of the inverted supply versus price, and a big thank you to Sanjay for sharing this with me. This graph shows the existing homes months of supply inverted from the National Association of Realtors versus the seasonally adjusted month-to-month price change in the Case-Shiller index. Now, this is kind of a tricky one. So this doesn't really portray the fact that the market's going to bottom, but it is very interesting to look at nonetheless. And here you can see the months of supply is not seasonally adjusted. And the last 7 months are in black, showing a possible shift in the relationship, and prices are now falling somewhat in line with low levels of inventory. So typically what happens when there's low inventory, prices go up because there's too many buyers chasing too few products on the market. But in this case, they're beginning to fall together. So that's a bit of a negative. Now, getting back to your big question, this is actually using the IA macro model. It shows you that there is a 9-month lag between macro dropping and real estate falling, and there's a 6-month lag in the stock market, the real estate market falling after the stock market tops. Okay, and this shows the actual S&P 500 benchmarked against real estate prices using the benchmark model within the macro model. So again, 6 months. So stock market, say, tops out January 1st. It'll be July 1st when the real estate market tops out. And that is precisely what has happened. So it's uncanny the way this thing works. Now, let's talk about one other factor as well, which is very important in real estate. And I did say way back in summer 2022, I expected to dip in the market. Yes, some markets got crushed. San Francisco, some houses are down 30% in just 6 months. It's insane. Other high growth markets, like take Miami and Austin, they're not suffering as bad at all. But springtime is coming. And what that means is humans follow nature, I believe. And I've seen this trend as well. Humans, prices be damned. They just want to build a new nest in springtime. It must be instinctive in our reptile brains. And springtime, you get a rise in prices. And I think we're going to see that maybe starting in March, which will align with some of the data we just showed. So hope that helps. And favorite part of the show, helping animals. Thank you. We donated to the National Marine Wildlife Center to help support the care, food, shelter, medical rehabilitation for these seals. And you can see here, it's so cute. They're all named after, I'm going to get this TV show wrong, but a famous children's show with Muppets or something. The Swedish Chef, Miss Piggy, Statler, Fuzzy Bear, Dr. Bunsen Honeydew, Beaker, and Kermit. Kermit the Frog, yes, I have heard of that guy. So thank you all for making that possible. And let's jump into some live questions. And I hope we have a ton. And again, thank you to the community and thank you to everybody for being here. Let me pull this up. And also to the moderators in the chat. So first question is one Brydom. How do you see Bitcoin and Tesla moving in the next couple of months? What entries would you suggest? Well, this is tricky. And I think about this almost every hour of every single day. I model, I map, I look at TA, I look at pairs. And right now, if I go to year end, because the longer the time I have, the more accurate I can be. as much as possible. I do believe Bitcoin will be somewhere between 30 and 42K at some stage in the next, by the end of the year, say Christmas or New Year's Eve. Now, Tesla, there's so much goodness coming out in 2023. It's mind-blowing. The Cybertrucks, we're going to start seeing Megapack sales numbers coming in. We're going to see Tesla crushing all ICE manufacturers. They're already selling, they're completely sold out of all their cars already just after slicing prices. And then there's all the incentives to buy these cars. So, and the 2 gigafactories are ramping up in Berlin and Austin. So I think it's so hard. But, when Tesla was at 106, 110, 120, I was like, yeah, Tesla's going to crush Bitcoin in 2023. Now that Tesla's at $200, it's doubled. I don't know anymore. So I would be guessing, and it really is a coin flip as to what happens with regulation, what happens with on-chain accumulation, who's buying, who's selling, who's manipulating Bitcoin. Either way, $300 Tesla, easy target for the year. That's another 50% from here. And Bitcoin could do another 50% from here. So that's why I split the difference and I pair trade between. So hope that helps. Fireman, what are your thoughts on Argent Trail track? It has shown strength this week. Dr. Metcalf is an advisor. I did check it out. I still didn't like the tokenomics, but it has been doing very well. But there's a lot of stuff that's exploding. Like I did a video on some of the AI competitors of the graph, the so-called crypto AI competitors, and some of them 900% year to date, which is mind-blowing. So again, there's a lot of stuff on fire, but the question is, how sustainable is it? And when tokenomics are not good, I tend to shy away. But I do have my eye on it. It's in my watch list. I have a watch list that I watch, which includes pairs, the top 100 cryptos. It includes short activity, you name it. And now Argent Trail is in there. And I will also do a deeper dive on refining the tokenomics. So let's hope that helps. Happy feet. Thank you so much. You are so thank you for being here since the beginning of time. As per yesterday's show, we are 50% ETH, 45% Bitcoin, and 5% Sol. Would you recommend selling our Ethereum at a loss at about $500 in ETH and buying Bitcoin to bring Bitcoin to 80% of our portfolio? I think 70 to 80% is safer. Remember, I always preach capital preservation first and then alpha second. And you're a little low on the Bitcoin, but the problem I've been grappling with now for probably a year and a half is ETH. ETH and all the layer 2s and the convoluted processes. Now the regulators are coming after them. Who knows, staking, it's kind of tricky. I would say, though, Happy Feet, you are, and assuming you have other portfolios, remember, thirds never have more than a third of your assets in crypto. So assuming that is the case, I'd go heavier on Solana. I mean, every single fundamental analyst, every single data point is mind-blowing. And the fact that everybody's coming out and attacking Solana, I had a conversation with somebody yesterday about this, is actually a good sign because they see it as a real threat. That's why you're seeing so much FUD out there. And that's why the team is remaining silent. So, it's hard to say. I would go heavier on Bitcoin. I would go heavier on Sol. And I do believe Sol will outperform all three. And that's the way I'm positioning myself. In fact, well, I'll do an update within Patreon as well to show you my exact holdings across equities and crypto because there has been a lot of change lately. Let me see. AC1. Sorry to distract, as this is not a crypto investment related, but it's anything we, the community, can do for the crisis in Turkey, Syria, put together. Politics aside, it's really heartbreaking. Yesterday, as I saw the recent numbers, like 33,000 dead, 180 home builders in Turkey were arrested for building shoddy construction. So what we'll do next week is we will donate to help the animals and communities devastated by the Turkey-Syria earthquake. We'll find a good way and we'll research a good way. So thank you for that. Steve Kingston, Algrant Foundation partnered with Clinton Foundation to launch the Global Climate Resilience Fund. How will this affect the price in your opinion? So what we have noticed, I actually answered this question in Discord the other day. Went in, did another check of, again, the tokenomics, the centralization of Algorand, etc. And it, first of all, if you asked me 20 years ago, would I have trusted the Clinton Foundation? I said, yeah. Today, I don't know. But yeah, I think that'll be a nothing burger. It's like if some crypto partners with like a Google or whatever, it doesn't really bring about any price action. So I'll see. And sometimes as well, some crypto projects are so desperate for traction that they'll just partner with anybody just to try and get their name out there. So it doesn't change anything from my perspective at Algorand. There's far, far faster horses out there. So hope that helps. And I won't talk about the Global Climate Resilience Fund because I have no idea what that is. But I'll have another look, Steve. Thank you so much for that. And thank you as well for your super sticker. Jeff Hammer, Bill Weimers chatting with you this morning. KNMT, Dog1, and P. Appreciate you all. Thank you all for being here. I'll see if anything else. People don't trust Billy C. Yeah. I'd say don't trust politicians. That was from Cyberdoodle. What a cool name. So with that, I am just waiting to make sure that is the end. I haven't got notification from the person harvesting questions from you all. But thanks for watching. Hit the likes. Appreciate you, everybody. And I'll see you all tomorrow. Goodbye.